And well, to discuss more, we're now being joined by Ajay Bagga, a market expert. He's joining us from Mumbai. Thank you so much for joining us this morning.
Thank you. Thank you for having me.
Right, we just talked about JPMorgan and its report and prediction of and forecast. Well, with China hitting back with reciprocal tariffs and European Union suggesting the same, what impact do you see of the escalating trade war on the U.S. and the world economy?
Yeah, a lot now depends on the U.S. reaction to the Chinese retaliation. What happens over today? In case nothing happens for now, markets will have some amount of relief. But overall, the momentum is broken in the U.S. markets. We must remember 18% of the U.S. markets are owned by foreign capital. And if that starts to withdraw, then all bets are off. So, as you said in your segment, the tariffs were expected to be lesser in quantity, shorter in duration, more temporary, and more as a negotiation tool. They were supposed to be a means to an end. Now they've become an end in themselves. That is what is roiling the market sentiment globally.
And do you see, what impact do you see on the global markets if the U.S. does go into a recession in 2025, as suggested by forecasts?
Yeah, $30 trillion is the US GDP out of a global GDP of $105 trillion. If that economy is not growing, that leads to a lot of second order, third order effects, a lot of consequences for the rest of the world, which is either a supplier or which is very dependent on a US supply chain. So we will see worse markets in case the US goes into a recession. However, what happens is markets react 3 to 6 months in advance. So the correction we are seeing in the US markets, global markets, is probably pointing towards a third quarter slowdown happening in the US and maybe a recession by the end of the year. And markets are already discounting it. That's what we must keep in mind. The markets will lead and the economy will follow. Markets will forecast what's going to come over the next 6 months. And the markets right now are forecasting a lot of rain and sunny weather is not coming in a very short time.
And while talking of India, what kind of impact will the U.S. recession have on Indian stocks?
See, we have seen in 2008, we have seen in 97 with the Asia financial crisis, you do get caught up. 2013 with the taper tantrum, when Ben Bernanke started to withdraw the stimulus in the US, India also fell quite strongly. So up to a limit, we can hold our own. But there is no decoupling. There is a very strong correlation of global markets because of capital flows having linked them up. So as happened in 2008, the US falls first, but at some point, India starts falling as sharply. So we were down 60% in 2008 after holding our own for a couple of months. So we have to just wait and watch and hope that it's a very shallow correction in the US, both economically and the stock market wise. The Republicans are known to be pro-business, pro-markets, pro-the economy. Hopefully there'll be a course correction which will avoid global turmoil.
And well, that being said, what is your outlook for Indian markets in the short and medium term?
Indian markets will be sideways at best. We are okay on a domestic macro scenario. The structural story is good, but the cyclical story has really worsened a lot. So the tariffs were worse than the worst case scenarios for most people, and we are seeing that market froth being taken out, and we will get caught in this. So despite our domestic story, our structural story being very good, for a number of months, we might be caught in the global turmoil. So I would be very cautious and I would not deploy incremental capital till we get some clarity. Hopefully over the next couple of months, 3-4 months, we will get more clarity on the tariff future and on the economic growth impulses. So wait and watch and be very cautious.
Right. And just before I let you go, how do you think India will be preparing for that outcome?
India is prepared. India is underinvested. So the households invest less than 5% of their capital into the stock market. So it does not lead to a very massive wealth effect. The US exports are about $83 billion for a $4 trillion economy. Maybe 20 billion of them get impacted directly, and there's a slowdown. So 0.2, 0.3% of GDP is what we see as getting impacted for India. But I'm sure the government will bring out some stimulus. The RBI is expected to cut rates on April 9th. So monetary stimulus is already there, and I'm sure more such measures will be taken, waiting for a fiscal stimulus from the government to give a safety net to the industries that are getting impacted by global tariffs. And we have to also raise our own protectionist barriers, because China will dump, ASEAN will dump into us. The goods that are not getting sold in the US will start coming into our markets. That happened with Trump tariffs 1.0. We have to protect our domestic industry against that dumping also.
All right. Well, thank you so much for joining us. That was Ajay Bagga, market expert, joining us from Mumbai. Thank you so much for joining this morning and giving your experts.
Thanks a lot.